Welcome to the March 2026 portfolio update for the CPF Property Debt Fund. My name's Xander Ryan and I'm a portfolio manager. I'm joined by Joe Christie, an executive director, and Noah Morabito, another portfolio manager. We're going to start with the loans in focus for the Property Debt Fund, starting with the Junction. We have a first mortgage paying 10% and a second mortgage paying 17%. This is the third and final stage of a townhouse development. This stage includes 42 townhouses. Joe, could you give us a bit of an update on the Junction?
Thank you, Xander. Yes, as you mentioned, it's 42 townhouses, so there's a little bit of construction risk, but we're very happy with the construction program. There's an excellent development partner, so everything is being built to budget and to program. And then the second risk is marketing risk, and that's very encouraging as well. So the contracts that are being received through the marketing program are above our valuation or our underwriting feasibility model. So effectively what we're saying is that they're building to program and to budget, and they are receiving sales for the completed product or yet to be completed product at above valuation. So it's a very pleasing outcome for the Junction.
Thank you, Joe. Moving over to the Foundry. So the Foundry, we have a first mortgage paying 10% and a second mortgage paying 17%. This is the exact same team as the Junction, so it's the same builder and same developer. This is the first stage, which includes 28 townhouses and the civil works. Noah, could you please give us an update on the Foundry?
Thank you, Xander. Yeah, on the Foundry, it's essentially a rinse and repeat model of the Junction. So it's as Xander mentioned, it's the same builder, same developer, same team around that, and we're looking to achieve the same results and mirror that success that we had there at the Junction. And so in terms of construction, early civil works have just begun for the past month, and expect to see more drawdowns throughout the year as we look to complete those first 28 townhouses.
Look, importantly too, just to add in, we do have our own development management team as part of the lending conditions that attend PCG meetings or site meetings at both the Foundry and the Junction, which is pleasing. And Noah, you're up on site quite often with that team.
Thank you, Joe and Noah. Moving over to Brookwater. So we've got a first mortgage paying 10.5% and a second paying 18%. This is a childcare site with a bit of medical attached. They achieved their operational works approval in December, and they started construction earlier this year. Joe, could you give us a bit of an update on the valuation?
Yeah, look, thank you, Xander. So there has been an updated valuation, which seems to be a common theme at the moment, that it's above our underwriting price. So we had a feasibility model prepared based on a certain valuation, and an updated valuation has come to hand, which has been significantly above that underwriting price. So it's very pleasing. You mentioned that they've achieved their operational works approval. So in conjunction with the uplift in value, works have commenced on site. They've done some preliminary civil works, and I think they're about to lay slabs of concrete in the coming month. And again, we have our own development management team that attends all the monthly PCG meetings and monitors that project closely. So anything to add, Noah?
No, that's about it on Brookwater. Yeah.
Progressing well.
Moving over to Minto. So we've got a first mortgage paying 10% and a second mortgage paying 16.5%. This loan is in New South Wales. The other ones have been in Queensland. And this is a 122-place childcare centre, and construction started at the start of the year. Noah, could you give us an update on this?
Yeah, so I was at the site not too long ago, and they just came in with their first progress report for the year. So how it typically works is, work start on site for February, and then we get that February progress report. So some investors would have had the opportunity to invest in the project throughout the past week or two. And so, yeah, the early works have been done there. They've got the first slab down and works are looking good. So everything's on track for a repayment towards the beginning of next year.
Oh, perfect. And there'll be more construction draws for that one. So if people are interested in adding to their position or creating a new position, there'll be the opportunity.
Absolutely.
Moving on to Teralba. So we've got a first mortgage paying 11%, and this is a townhouse development in New South Wales. Joe, could you give us a bit of an update, a similar theme on the valuation?
Yeah, thank you, Xander. You mentioned that construction is progressing well, and it is significantly progressed now. Again, we have our own development management team that attends the monthly site meetings. So that we had a few rain delays sort of last year, but now it seems to be really progressing quite strongly. And again, that common theme, as the project is now reaching completion, they're starting to go out to the market and looking for some marketing and sales interest, and they're getting interest at above valuation. So again, it's a very pleasing outcome for investors in that Teralba project.
Moving on to Walloon. So we've got a first mortgage paying 10.5%, and this is a residential land subdivision. Noah, could you give us an update on progress at Walloon?
Yeah, so all the land lots have been subdivided now. They're just finishing final services to the site. So that includes stormwater and power. That's just about to be all done. I was up on site earlier this week, actually, and the roads are down. They're just doing the footpaths and the final turfing. And then that one's, so it's at later stage construction at this point. So it's significantly de-risked, and it's set for a June expiry or May-June expiry, and all on track at the moment.
That's a good update, and there'll be, as it's coming to its closes, there can be some of the bigger draws as some big items are put in. So if you're looking for a shorter term investment, that could be a good one for investors. Moving on to Paddington. So this is one that's been with us for a while. We've got a first mortgage paying 10% and a second mortgage paying 16%. We're in the process of getting refinance out of this loan. New valuations were completed in this year, and majority of the loans had an increase or stayed at value. And we're on track for a late March, that's early April refinance. Anything to add there, Joe?
No, look, I think you've covered it quite well, Xander. Look, it's probably taken a little bit longer than we would have liked to get refinance. I mean, probably I put that down to the Christmas New Year break. We probably lost 6 to 8 weeks, but as you mentioned, all the conditions precedent for the new financier to come in and provide that refinance facility appear to have been met. All the valuations have been updated. They've been quite pleasing. There've been some uplift in value. So we're just now waiting for that loan to be documented and refinanced. And they've had an indicative approval, and I would have thought that should be documented. I'd be pushing for by the end of March, but there may be a week or two of slippage.
That's a good update. And as for all the loans, that if they do go over the expected term, investors will continue to receive the full interest and then be paid that interest when the loan's finished.
That's correct, yes.
Moving on to, we've had our loans in focus, and now we're just going to do a bit of a rapid fire on some of the other debt fund updates. So starting with Spring Creek Stage 6, that's one that's going to be expiring shortly, and we expect that around late April. Spring Creek East 2025, we're waiting on an updated valuation, and that's going to happen. We expect that to come in March. So unit holders in Spring Creek East will have the chance to roll over for another 12 months. Marcoola, a similar thing to Spring Creek East. We're waiting on an updated valuation before we move into the construction facility, and they'll start construction there shortly. So unit holders will have the chance to roll over again into a construction facility, or they'll have the chance to redeem. Bowral, they got their development application approved late February, and in April we'll be rolling into a construction facility for that loan. So unit holders received a written communication about what the timing of that will be and their options in that loan. Similarly, in Narangba, investors also received a written communication that the loan will be rolling over in April, and investors will have the chance to roll into a construction loan or redeem their units. Moving on to Musgrave, so that's our residential splitter. That's going to be getting the extension to July, and unit holders will be receiving some information shortly. We're just getting that extension legally documented, and then we'll come to unit holders with that. And then finally, with Tingalpa, unit holders have been receiving partial repayments the last couple of weeks, and there will be a final repayment on the 9th of March for first and second mortgage holders, and the loan will be completely repaid. Thank you for listening to the March 2026 portfolio update. As you know, we have a lot of loans that we cover, and we didn't quite cover every loan. So if a loan that you're invested in wasn't mentioned, feel free to contact the team at CPF. Our email and phone number will flash up on the screen, and we'll be able to answer any questions for those loans. Thank you for listening.